Hello and welcome back to another week of your Mortgage Market Movers Weekly, where we are breaking down everything that's going in the macro economy to help you make better home buying decisions. This week's 30-year fixed is sitting at a 6.56, which is down about 2 basis points from last week's 6.58. Some pretty big data coming in that's already gone on this week as we get ready for the big September Fed meeting. So we are going to jump into that, everything else that's been going on, and we will meet you over at the charts. We are back at the U.S. 10-year. The rates, they look like they've been coming down ever since. Let's see, this was a high in May of 2020. Yeah, May 22nd, 2025. All right, so May 22nd. Yeah, they look like they've been coming down. There's this floor right here where it looks like the 10-year has not been able to break through. We will see what happens. We have a September Fed meeting where it's looking like it's fairly likely that rate cuts are going to happen. If that's the case, then that should be good for mortgage interest rates. So we should expect to see the 10-year come down, but we just kind of have to wait and see what the data is looking like. But the probabilities are fairly high for a Fed rate cut. And of course, when the Fed cuts the rates, just so everybody knows, they are not cutting mortgage interest rates directly. So getting over to the economic calendar, this week, Tuesday, we had manufacturing PMI. This is a survey of purchasing managers, and it looks at in the manufacturing sector, above 50 shows expansion, below 50 shows contraction. So it looks like we had contraction in manufacturing. So manufacturing was slowing down actually. Previously it was 48. So it's not as bad as it was last month. I want to say this is a monthly figure. Yeah, monthly. However, it was forecast to be a bit better. Let's see. Of course, we had President Trump speaking, and this was just about the movement of Space Force from Colorado to Alabama. So nothing crazy really happened. We had JOLTS job openings. So this is the job openings and listings. I believe that's what JOLTS stands for. Job openings and labor turnover survey. So labor information, which is very important right now with the Fed. There's a dual mandate that's they've been pretty concerned about, and anything labor or interest rate related is going to be something that we want to keep an eye on, because we want to see any potential clues for the Fed cutting the interest rates, the federal fund rate, at their September meeting. So this came in lower than expected and lower than previous. So labor market is not doing as well as it seemed to look to be doing. For a little while, the labor market seemed like it was holding up, but right now this was at 7.18. This was for job openings, so less job openings than previously and less than the forecast. Let's see. Tomorrow, Thursday, which you might be seeing this on Thursday. So if you do, the ADP non-farm employment change. So we want to keep an eye on that, and unemployment claims. See how the labor market holds up. We also have the services PMI. So seeing if there is an expansion or a contraction in the services sector. It's forecast to have an expansion, and previously was an expansion, not by much. So we will see. And then Friday we have average hourly earnings, non-farm employment change, and the unemployment rate. And let's see, it's not next week, but the following week on the 17th is when the September Fed meeting is, and that'll be a huge watch for us to see what is going on with the interest rates. Now, like I said, it's pretty dang likely, and this is kind of what the market is pricing in, the stock market, the bond market. It's a 96.6% chance of a rate cut. So we will see with that labor information coming in. I think when we do see the labor market not doing so hot, it's more likely that we're going to see the Fed want to cut rates. For a little while, inflation was ticking up there and labor was holding steady. So Jerome Powell was saying that there's not really much of a reason to have a rate cut. However, this thesis seems to be breaking down, and especially so now we have higher inflation. The PPI numbers came out, the producer price index, showing pretty high inflation on the producer side of things. So it looks like the tariffs are showing up in in inflation numbers now, and the labor market is not holding up either. So inflation is bad, labor market's not doing great. So it's kind of a hard spot right now for the Fed. But yeah, the market is pricing in a 96.6% chance, and we will keep an eye on this in the next week too to see if this figure changes. And market is also pricing in another potential rate cut before the end of the year, so that would be 2 rate cuts this year. Like I said, the 30-year fix is sitting at a 6.56, and hopefully we break below that floor in the 10-year, and that would really help to bring rates down. And that's about all I have for you this week. So if anyone has any mortgage questions, give us a call at 877-TEAM-MBL or visit us at www.mortgagesbylinda.com. And everyone have a great week. Bye.